A girl in Texas buys sneakers, earbuds, and a jacket. $347 total. She pays $0 up front. 4 clicks, done. 3 months later, her credit score drops 87 points. She never missed a payment. She never carried a balance. She did everything right. What she didn't know, those 4 pay-later purchases were reported as 4 separate loans, 4 open credit lines, 4 red flags, and nobody warned her. This is Buy Now, Pay Later, a $680 billion trap disguised as free money. Millions are using it right now. Most have no clue what's happening to their credit in the background.
Checkout. The total says $180. Below it, a friendly button, pay in 4 installments of $45. 0 interest, no credit check. Feels like a life hack. Why pay now when you can spread it free? Your brain whispers, you'd be stupid not to. This is the illusion, and 100 million Americans are inside it. Here's the truth. That 0 interest purchase is a loan from a company you've never heard of. Affirm, Klarna, Afterpay, they pay the retailer instantly. You now owe them. And while you see 4 easy payments, the credit system sees someone who can't afford $180 without financing it. The average user makes 12 BNPL purchases a year. That's 12 open credit lines running at once, some as small as $23. A $23 loan. Imagine how that looks to a mortgage underwriter. But here's what nobody tells you. BNPL companies don't report on-time payments to credit bureaus. They only report missed payments. You pay perfectly? Silence. You slip once? Reported instantly. The system punishes. It never rewards. An internal memo leaked from a major U.S. bank in 2024 revealed something chilling. Applicants with active BNPL accounts were flagged as higher risk, even with perfect payment history. The algorithm didn't need a missed payment. It just needed to know you used it at all. And this is where things get dark. A Federal Reserve study found 18% of users now finance groceries, food, not luxuries, basic survival. When you're financing dinner, you're not managing money, you're drowning, and the lenders know it.
They told you BNPL is smarter spending. Split costs, manage cash flow. The data disagrees violently. Harvard tracked 47,000 BNPL users over 2 years. Spending jumped 31% per transaction when BNPL was available. Your brain doesn't register $180, it registers $45, a discount that doesn't exist, and you spend more every single time. Wealthy people don't use BNPL. Not because they can't, because they understand one brutal truth. If you can't pay cash for a $200 item today, you can't afford it. Here's the counterintuitive reality. BNPL isn't a payment method. It's a behavior modifier. Retailers pay BNPL companies 4 to 7% per transaction. Why? Because you'll spend more. Victoria's Secret reported a 55% increase in average order value from BNPL users. 55%. And this single realization changes everything. Mortgage lenders are now specifically trained to spot BNPL usage. Fannie Mae updated guidelines in 2024. BNPL obligations must now be included in debt-to-income ratios. 4 payments of $45 isn't just $45, it's a $180 liability, reducing your borrowing power. Your dream house, your Klarna habit is quietly disqualifying you. 3 mental shifts. First, 0 interest on junk is still a loss. The rate is irrelevant if the purchase was unnecessary. Second, you don't need to miss a payment to look risky. Just using BNPL flags you. Third, spreading payments isn't managing money, it's masking a cash flow problem with microdebt. The question isn't, can I afford 4 payments? It's, why can't I afford this up front?
This isn't about shopping, it's about patience, and patience is the muscle modern life is designed to kill. Every system around you eliminates waiting. One-click ordering, same-day delivery, instant financing. The gap between wanting and having has hit zero. In that zero-gap space, financial judgment suffocates. Schopenhauer wrote, "Wealth is like seawater. The more you drink, the thirstier you become." BNPL doesn't satisfy desire, it multiplies it. There's a reason they target 18 to 34-year-olds. The decision-making part of the brain is still developing. Impulse control is biologically weaker. That button isn't convenience, it's a weapon aimed at your vulnerability. The $680 billion industry runs on one human weakness, the inability to wait. Every time you click Pay Later, you prove their thesis correct.
Next time you see Pay in 4, pause, feel the urge, then ask, would I buy this if I had to pay full amount in cash right now? If the answer is no, close the tab. Your credit score stays safe, your future mortgage lives, and the version of you 3 months from now won't be staring at a credit report wondering what went wrong. The real trap was never the payments. It was believing you could borrow convenience without consequence. If this hit you, subscribe. Next file exposes something darker, the hidden bank fees you never notice for services you never signed up for. This was the Greed Files.